Welcome to Accounting 101. On this lesson, we will be continuing with the previous lesson of REMIC Traders, where we will be looking at your fixed asset notes, where we'll be looking at your non-current assets, your land and buildings, your vehicles, your equipment. How do we calculate depreciation? How do we move from your gross carrying amounts to your net carrying amount? Then here there are amounts that are given as per the trial balance. Firstly, you have your 800,000, your gross or your cost for land and buildings. Then you have vehicles on your balance sheet is given as a cost of 190,000 rands. Then you have equipment which has a cost of your 170,000 rands. Remember, whenever we record fixed assets or non-current assets, we record these assets on their historical cost, the amount in which they were paid for or they were bought for. Now, we need to look at your accumulated depreciation. Accumulated depreciation, we are looking at the opening balance of your accumulated depreciation plus the depreciation of the year, which will give us your net carrying value at the end of the financial year. Now, the gross carrying amount is used when they are preparing the pre-adjustment trial balance. Then the net carrying value or the net carrying amount is used to prepare what we call balance sheet or statement of financial position. Now, let us look at land and buildings. We do not have any adjustment or additional information pertaining to land and buildings, so we don't have the accumulated depreciation, which leaves us with your gross carrying amount equals to your net carrying value. Therefore, 800,000, because we have nothing to adjust with regards to the accumulated depreciation, that will give us 800,000, same amount, no adjustment to be made. Then let us look at your vehicles. Now, on our additional information, we have some information regarding vehicles. Okay. Now, they are telling us that additional information, depreciation is calculated as follows. We will skip the equipment because it's the last one. On vehicles at 20% per annum on cost price or on a straight line method. It depends which term do you want to use or you prefer to use. Now, if they are telling us that we are going to use a cost price or a straight line method as the method of calculating depreciation in relation to vehicles, that means the depreciation will be calculated on the cost balance, on the historical cost. And there is nothing that you need to adjust for when it comes to your accumulated depreciation. So, then there is a note here. Go back. Then there is a note. Yes. Then there is a note here where it says a new vehicle was bought for 95,000. That's a historical cost. That's a cost price on 1 September 2014. Now, we need to calculate depreciation for the new assets and also calculate depreciation of the old assets. So it means 190,000 rands, because this is a pre-adjustment trial balance as from 28 February 2015. That means this 95,000 rand is part of this 190,000. So if we want to calculate depreciation, we will need to say here accumulated depreciations on vehicles. Going to say 79,000 rand plus 28,000 is equal to 107,000. Now we want to determine how did we get this 107,000 rands. Now let us go to our next slide so that we can explain in simple terms with regards to how did we arrive at this figure. Okay, vehicles. How did we calculate this amount for depreciation? We said the new vehicle of which cost 95,000 times 20% as per the adjustment times 6/12. Now, why do we say 1/2 or 6/12 here? Because the asset was bought on 1 September. So it will be September, October, November, December, January, February, which is 6 months. So 6/12. This asset was bought during the year. So that is why we are saying 6/12. Then we get 9,500 rand, the depreciation of the new asset. Now let us calculate depreciation of the old assets. Then for the old asset, it will be 95,000 rands times 20%, the rate is the same, times 12/12 or times 1 or nothing, because these assets, we had them from the beginning of the year until the end of the year. Then we got 19,000. So 9,500 times 19,000, then we get 28,500. Then 28,500, which is the depreciation for the year. Now, let us go back. So we need to say 28,000 rand, the depreciation for the year, plus what? Plus the depreciation, plus the accumulated depreciation balance as from the beginning. Then we need to say 79,000 rand from, this is a given amount of the accumulated depreciation on vehicles as from our trial balance, pre-adjustment trial balance, plus 28,500 that we just calculated and confirmed that is correct. Then we get 107,500 rand. So basically the accumulated depreciation is made up by taking the balance for accumulated depreciation plus the depreciation during the year. Then you say 190,000, which is the historical cost, minus the accumulated depreciation, then you get your 82,500. Then when we are preparing your statement of financial position or balance sheet, you're going to use this amount net of depreciation and all accumulated depreciations. Then let us look at your equipment, 170,000, your historical costs. So with regards to your adjustments or additional information, we are told that on equipment, depreciation is calculated as follows. On equipment at 10% per annum according to the diminishing balance method. Then the diminishing balance method is also known as the reducing balance method, meaning that you calculate depreciation on the reduced amount, where you say cost minus accumulated depreciation, then you apply rate. Okay, let us now confirm this 102,050 rands that we got here with regards to equipment. 94,500 rand is from your trial balance, pre-adjustment trial balance. By pre, before we take into account adjustments. that happened, or activities that occurred during the year. Then we say plus 7,550 is equals to 102,050, which is the accumulated depreciation. Then when we want to calculate your net carrying value, you're going to say 170,000 minus 102,000, which your accumulated depreciation, then you get your 67,950. Then here you are able to make a clear comparison of what is presented on the pre-adjustment trial balance and what will be presented on in your statement of financial position or balance sheet. Now let us calculate this 7,550 so that we can confirm that this amount is correct indeed. Then here we are, equipment depreciation, 170,000 as per the given amount, historical cost, minus the accumulated depreciation, which is given in your pre-adjustment trial balance, is equal to 75,000, 550, which is your book value or your carrying value or your carrying amount. Then you apply rates times 10%. Then 10% of 75,550 is 7,550. So what you need to understand here is that whenever you are preparing or you're calculating depreciation on equipment for the purpose of this question or activity, here there are no periods simply because there were no movements. By movements, we are referring to additions or disposal. By additions, we are referring to the assets that have been bought. By disposal, we are referring to an asset that have been sold. So 7,550 as it is here, then it's calculated. Then let's go back again. Then that is how we got this 7,550. Then 94,500 from your pre-adjustment trial balance given amount plus 7,550, you get 102,050 rands, which is your accumulated depreciation on your equipment. Then we are done with the slide. So this part, your gross carrying amount, you are referring to your pre-adjustment trial balance. Then this one, your net carrying value, you are referring to your statement of financial position or your balance sheets. Then here we are recording these accounts rather at their net carrying values at the beginning of the year. So cost minus accumulated depreciation parts at the beginning of the year. Here, your balance at the beginning of the year, 800,000 for land and buildings. There were no movements, there were no additions or disposal. Then you will have for additions, nothing. For land and buildings, disposal, nothing. For land and buildings, depreciation, nothing. For land and buildings, which will give us the net carrying amount or net carrying value that is the same as from the beginning until the end. Then let us look at your vehicles. How did we get this 16,000 rands? Now we are going to go to your cost or your historical cost at the beginning minus, or the historical cost at the end, minus 95,000 rands. Now, you need to understand one thing here. This pre-adjustment was given to us at 28 February 2015, meaning that this historical cost is inclusive of this new asset that was bought during the year on the 1st of September. So we want the amount at the beginning of the year, because at the beginning of the year, we did not have this particular amount. So 190,000. So it's like we are working backwards here. It's 190,000 historical cost minus the new asset minus the accumulated depreciation. Then we can get the net carrying value of 16,000 rand at the beginning of the year. Then, with regards to additions, we bought new vehicles. Then we're going to record it at cost. Then 16,000 plus 95,000 rands minus your accumulated, minus your depreciation for the year. Next year, it will be part of your accumulated depreciation that was calculated here. And we did explain it thoroughly. Then you say minus because it reduces the value of your asset. It has what we call the negative effect. Then you get your 82,000 rand, 82,500. Then let's go to your equipment. You have 75,500, which is your book value at the beginning. 170,000 rand, your historical cost given from your pre-adjustment trial balance minus accumulated depreciation, you get 75,500. Then your 75,500 times rate is equal to 7,550, of which is your depreciation. There are no further additional information or adjustments, no additions, no disposal for your equipment. Then your balance at the end, 800,000, 82,500, 67,950 should equals to these amounts. 800,000, 82,500, and 67,950. That is how you confirm that indeed your calculations were correct. And that's it for this lesson. Continue to watch our lesson that will be uploaded in future. Continue to subscribe and watch my videos, like and comment, so that I will take into account your comments moving forward when I'm doing other lessons. Thank you.